All right, guys, today is 12th of May, and we took a trade today, the one that I placed in the group, and it was amazing displacement. My goodness. So I don't basically trade on Mondays, but when the opportunity presents itself, we just have to take the trade. And this video is not going to be a very long one, it's going to be a very short one. As an intraday trader, I already told you my high time frame is 1 hour. So when 1 hour gives me a structure, that is what I follow. All right. So over here, you could see that there is a break of structure to the downside. The support has been broken, so the market has break the support structure, and then it created another one over here, which is this one. And so um this is also another break of structure. And as an intraday trader and as SMC trader, as I am, I will always want to trade from a structure that the investment banks and hedge funds have created. They've actually manipulated the market. So that is what I will that is when it gives me that kind of structure. That is where I enter the market. All right. So we have another break of structure. Not wasting much of your time. You have another break of structure, and then there is this particular pull, and this pullback is an incomplete pullback. My 1 hour structure before I even enter the lower time frame for more confirmation. So this pullback was an incomplete pullback. It closed below this, creating some form of break of structure because price turned out to move here to test this candle high, but it didn't present a very good pullback. So it's an incomplete pullback that will serve as liquidity. So we have our break of structure, we have another break of structure. If price did not create any form of this movement, this incomplete pullback, if price did not create this incomplete pullback right here and just jumped right above here, I would want to wait for this highs to be taken out. So this one would have been my inducement, but because price created another form of supply at this range, which was an incomplete pullback, this rather becomes my liquidity for price to take this one out and then tap into this fair value gap. And then the last buy candle before the sell movement or displacement is this green candle. So we have this fair value gap, and then we have this order block, and then we have this order block. So I would always I want price to tap into the order block, and then after that I would want to look for confirmation. But this particular movement gave us confirmation, but price was not able to complete its movement, and then it was Friday. So Friday night the market will stop, and then price will open again on the Monday. So already I know price had hit our order block or our fair value gap, and so I would want to look for sales. I would want to look for opportunities. Then I sell. So right, I've gotten my structure here. Price came into the fair value gap. I went into 15 minutes for more confirmation. So upon going into 15 minutes for more confirmation, I saw that we had a lot of liquidity here. This is all trend line liquidities. So we had this trend line liquidity. I would want to also wait for all that liquidity to be swept, and then this trend line liquidity to be swept, and then over here we had this supply area closer to our order block, and it is either this is taken out or this is taken out, making this a trend line liquidity, and then this being our minor inducement. So we have our minor inducement, and then we have our major inducement right about here. So this is our major inducement. So this is what I was looking for. Either price takes out the minor inducement or takes out the major inducement. So price actually came back in here and then closed. You see, the price tapped into the minor inducement, creating a double top. Double top 2 is a fuel for the opposite side journey. Whenever I see double tops like this, for instance, if this other block couldn't hold and then price came back to sweep this other block, probability that the price will sell more, making this one an inducement. But the reason why this is the other block is because the previous candle had the minor inducement, the previous structure had minor inducement and then major inducement, and then price tapped into the last buy candle before the drastic move. So it's not like I am actually trying to just take any trade or so. I'm just trying to make up my model. This is my trading SMC model. There are other confluences that gives me more movement for me to enter the market. But if you look at the previous price history, the previous price history is supposed to give you the possible things that this second structure can do. And if price closes above this order block, that is a change of character in the higher time frame, like the 2 hours and the 4 hours. And the buyers will change, and then we want to look for more buys. But price got to the order block and then respected it. And then if you look at this place, we have all the sell side liquidity, meaning that price will also, after the change of character, price will also sweep all this particular buy positions. Price will sweep all of them. So now we know that when there is a change of character, there is money that the price will sweep or take. Understand? So that was Friday. Now I know price has tapped into my order block, and I know that when price changes, it is going into my favor. So market opened, and then Monday mornings can do anything. Monday morning can also sweep out this high before the price goes down. Monday morning can also sweep out this high before the man, because I have two inducement levels here. Price opened, and then there was a change of pricing. These banks and others, these big banks and money movers in the market had changed their interest and rate. So price closed here on Friday and it opened here on Monday morning. And all this movement here from this week to this week, price never closed below or above it. So this week and this week became from around 10 o'clock till somewhere around 6:15. The market was trading sideways, and this is what we call the consolidation or sideways trend. And then if you see, there is this movement too, that price was breaking highs. So there's this movement too, that price was breaking highs. This. The price was just breaking highs like that. So this is an uptrend, and then price couldn't break this high again, and then broke the low of this last buy candle, buy support level, and then price went up again and then opened below, showing that the shift from upwards has turned to bearish. So the market, you can now switch your buyers in the small and the lower time frame from buying to now selling, and this selling move corresponds with the 1 hour break of structure. You see, more the higher time frame is breaking structure to the downside. Price suddenly start moving in the lower time frame with a what do you call it, bullish momentum, and then hit a supply area in the higher time frame, which changed the structure, or the market structure shifted from going up to now breaking structures to the downside, corresponding with a higher time frame structure movement. So then therefore you can be confident and say that now the lower time frame is also corresponding with the higher time frame movement. So your bias is now with, you're now trading, you're not trading with a trend, you're rather you are trading with a trend instead. So after that, Monday morning, we thought price was just going to continue shifting downwards, but it started accumulating money. So from somewhere around 9 o'clock till 9, 10 o'clock till Monday morning 6 p.m., price was just trading sideways. And then all of a sudden, what happened? Price swept the previous resistance levels high, and this is what we call the liquidity sweep. When price taps above it and closes below it, it means there are orders over here that was being accumulated, and now price has taken those orders. And then if this is a valid liquidity sweep, it has to close its candle below this last price closing. Then we can say that price has changed character, or has changed its structure from sideways into going into actually what do you call it, into actually shifting to the opposite side. Now my entry time frame is 5 minutes, so I have to go into the 5 minutes and see what candle closed below what we have. After price created this movement, but but and then shifted, but this movement high closed above here, came back to retest it, and then started creating some kind of rejection right about here. Created first rejection, closed back into red, that's a confirmation. Created another bullish movement and then started going down in red. So over here is actually when I actually sold. You see, there is this fair value gap right about here, which violated this bullish fair value gap, making this stack. So this is an imbalance. If it was only one fair value gap, it is an imbalance. But if it appears to correspond with another imbalance, it is called a balanced price. So price will come back to that place and push price even lower or towards the direction it started moving to. So this inverse fair value gap is what gave me the confluence that when price taps into it, reject it, taps into reject it, I can now sell. So I sold right about here. I know this is a very long video, but I believe someone will learn something from it. So I actually risked $10 to make about $65. So imagine if you stacked the position, about 3 positions, that would be somewhere around $120, but you didn't actually, price read into your profit like $1. It didn't really read all the $10 that you've placed as your stop loss. It read into it for about $1.04. So you're actually risking $1, even though you are risking $10 to make $65. But in reality, you are risking just one. You risked $1 to make that $65, which is a massive profit. To be sincere.